Okay. No, that's okay. We do have a very full agenda this morning, so I would ask all municipalities that are going to be presenting this morning to present in an efficient manner and to keep your points, your comments on point, so that we can hopefully get through all of the presentations and discussions that are lined up on the agenda this morning. And for the guests that are in attendance, just a reminder that public comments are prohibited at this meeting. Bill and Kim, I would just ask that you or your staff keep us on task from a time standpoint so that we can hopefully accomplish everything that's in front of us on or about noontime today.
Will do.
Okay. So first up is the approval of the minutes to the September 10th, 2025 meeting. I would entertain a motion.
I'll move that.
And a second.
I'll second it. It's Kim.
Okay. Any comments or edits to the minutes? Okay. All those in favor?
Aye.
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 Mike, I'm going to abstain because I wasn't at that meeting.
Okay. Noted. Okay. Next is in regards to the city of Bridgeport. We are anticipating that we'll have in attendance for the commission today Mayor Ganem, Deputy Chief of Staff Constance Victors, Budget Director Frank McNary, Finance Director Kenneth Flatto, Thomas Gaudet, who is the CAO, and Royce Avery, the interim superintendent. And before we get underway, I just want to highlight that under Connecticut General Statute Section 138 of Public Act 25-174, the mayor of the city of Bridgeport is required to provide a report to this commission outlining its strategies to ensure that the city will not require supplemental grants and aid in future years, and appear before the commission to present the report and answer any questions from our commissioners. And before we get to the presentation, I would just ask our commissioners to introduce themselves. I'll start off. First, I'm Mike LeBlanc. I'm the Director of Finance for the City of Waterbury and Chairman of the Municipal Finance Advisory Commission. Tony?
Thank you, Tony Genovese. I'm the Administrative Officer and Finance Director for the town of Woodbridge.
Marcia?
I'm Marcia Marion. I'm a retired CPA audit partner for governments and now a finance director for the town of Brookfield.
Becky?
I'm Becky Seelman. I'm a principal and consulting actuary at Milliman, where I deal with municipal pension and OPEB plans.
Okay. Ed?
I am Ed Sullivan. I'm a partner with Little C, a CPA, and a partner with Little C in Hartford.
Glenn?
My name is Glenn Rybacki. I am an attorney at Pullman and Comley, and my practice is to do with municipal finance.
And Kim?
I'm Kimberly Kennison. I'm the Executive Financial Officer for the state of Connecticut at the Office of Policy and Management. One moment, Chair. We're getting some back talk from Christina Note Taker, and I don't know if that is CTN or not, but I don't want to mute it. We do have guests today coming from the media, but if it is, we have to make sure that we don't hear your background.
So they probably called the meeting. What do? I do? I have to join the meeting? I thought I was on already. So.
Kim, is Christina muted?
Why am I on and can't see?
Hold on. We got to members. We're going to mute everybody, And members, you can take yourself back off. We can't hear you, Michael. Sorry, I muted everybody.
That's okay. All right, we're back in business. So do we have Mayor Ganem on the call with us today?
Good morning, Mr. Chairman. This is Ken Flato, Finance Director, CFO Bridgeport. He is supposed to be calling in from Washington, and we're hoping he'll get on any minute. We do have our Deputy Chief of Staff, Constance Vickers, Chief of Staff, Dan Seamus, OPM Director, Frank Magnari, myself, and our Superintendent of Schools on the call.
Okay. Well, good morning to you all. Ken, will you be handling the presentation?
Constance, do you want to start for a minute, or do you want me to start? Whichever way, or Frank, whichever way you prefer.
Sure. Good morning, everyone. And I was just texting the mayor. He's trying to get on, but we don't want to hold up. So I know that you have a full agenda ahead of you. But thank you all for this opportunity. It's been a good experience for us to look ahead. We've done the same exercise with Bridgeport Public Schools, and interested to see how this conversation goes today. But I would like to turn it over to Ken and to Frank Magnari, our OPM director, for the presentation.
Thank you, Frank. Maybe I'll just do a quick thank you, folks, very, very much. We appreciate your service. Some of you know I've been involved in government many years in various communities and various roles. And I just really wanted to kind of cover three quick highlight aspects of this that I hope would be of value to your group and to the state. We appreciate all the officials on the call. First, we've worked pretty diligently, Frank and his office, our team, to prepare this 5-year plan. It's always hard putting together a long-term forecast, a 5-year plan. And like every city and every town, there are challenges to doing that, and a lot of components and factors that go into it. From my perspective, I wanted to really kind of focus on three quick things. One is, if you compare us and look at our actual kind of in-house governmental functions and staffing, I can assure you, not only do we have a highly competent team, but we have a lean team. And we've developed that over the last decade since the mayor's come back into office, and really put together a huge myriad of activities and of programs to try to deal with the kind of issues that I think you want us to deal with and want communities to deal with. Just to kind of mention a few, because I think this is along the kind of lines of what your group is seeking from us and hoping that we will do. We've done a myriad of cost-saving activities. I mean, we've had shared services with other communities, just as a couple of examples. We bid out and developed a program of bidding out our major utility services. I can tell you we've saved almost $2 million a year by bidding at the right time, doing long-term contracts for energy services, for gasoline, for both the city and the school district. We have done that in consortium with 9 other communities to get good volume and good bids. We've done projects with Fairfield, with Trumbull, with Stratford, but in particular, clean energy projects, projects relating to flood control. So we believe in shared services. We believe in trying to stretch our bang for the buck. When we came into office, we inherited a pretty feisty deficit citywide. We took a number of actions in the first 2 years. Our fund balance was a measly 3% of budget. I'm pleased that over the last number of years, we've been able to raise that fund balance to 8%, the rainy day fund to 8% of our annual budget. That's just at the median. It's not a high fund balance, but at least we're at this stage where I can tell you safely that in terms of the city structural balances, we've got some money in the bank. We've got a good cash flow. We've reduced our pension liabilities. We strengthened our plans, building more contributions into our budgets. We've done the kind of things that you'd like to see us do. I won't go over the dozens of cost savings things that the mayor and that the administration have done, but they've been a whole plethora. We have had every rating agency has given us an upgrade in the last 3 years because of those efforts. We don't want that to diminish or to, disappear because of a 5-year plan where, yes, there are challenges facing us. And Frank we'll enumerate some of those for you. Yes, every city, every town has challenges. But the last thing that I would like to leave you with, one of the documents that we submitted to you was kind of a comparison, a big picture comparison of Bridgeport and our sister largest cities. And it's something that I try to dwell on because I don't think people really understand it. We are unfortunately very shortchanged in state aid. It's not a new situation. It's developed over the years, but Bridgeport gets between 40 and $80 million a year less than either Hartford or New Haven. That's a fact. That's something that structurally is not fair. We're the largest community. We have the biggest service burdens. We've got the biggest population. We have homeless people on opioid being shipped to our city from other communities and dropped off at clinics that then get released onto the streets 74 hours later, 72 hours later. It's a tough situation. So while we understand the mandate that we're looking to find ways to stretch dollars and to not ask the state for, to be greedy, because every community would like more state aid, I do want to ask and explain and give you the data so that you can see in comparison there is an equity issue. There is a fairness issue that we are not getting our fair share compared to the largest cities. And we hope that we'll redress that with some formula changes over the next few years to at least go part of the way, because as some cities got more aid, we got much less of that pie per capita and per resident. So with that said, if it's okay, I'm going to turn it over to our my colleague, OPM Director Magnari, and then back to Constance to summarize, and hopefully if the mayor got on, or if Dan Seamus, the Chief of Staff, wants to add anything. Thanks, Frank. Sorry, do we have Frank muted?
Can everybody hear me?
We do now.
Okay. I was using my phone for audio, so that's why. Basically, my name is Frank Magneri, Budget Director for the City of Bridgeport. What I have here today, and I won't take a lot of time because I know it's a large agenda, is the financial plan for the city, along with a list of assumptions and some mitigation or adjustments to the plan that we included in a spreadsheet in a presentation that was attached as well. So I'll just go over the broad strokes. In FY27, we assume a $20 million increase in property taxes. And then the year after, we assume a little, more of a standard levy increases. I'll say just as a broad, overview of the plan, right, as when you get from year 1 and year 2 of the plan, things can be a little bit more predictable. As you get further into a financial plan, it's really just all based on assumptions. And, we have to make assumptions to create the plan, but ultimately we don't know what's going to happen in those 3 to 5 years. So property taxes, that's a high level of increases. Other operating expenses, we assume to, just kind of increase at $1 million in FY27 because of a pilot that's coming online related to Steel Point, but then essentially inflationary afterwards. The city did utilize American Rescue Plan dollars to kind of offset some of its budget in prior fiscal years, and you can see in the plan that is coming to an end. So in FY27, we only have about $1.7 million left there. We did include an increase in state aid into the plan as part of our financial planning, so that is there. And income from investments, who knows what rates will be, but we were conservative and assumed that that's going to go down as we have less of a cash balance from American Rescue Plan dollars. Nutrition, you'll see dropping to zero. That's just because we're going to account for it in a separate fund. So that's going to come off of the general fund and just be accounted for in a special revenue fund. The expenditures are really broken up into municipal operating and municipal benefits, and then education operating and education employee benefits. The Board of Ed did it does have kind of supplemental to go over what they believe their fiscal picture will look like in the same 5-year period, and I believe they're prepared to talk about that. Debt service, we do have a drop off in 2032, so you can't really see it in this financial plan because it just goes out into 2031. But we are looking at things like exploring refinancing opportunities to help us restructure our debt and give us some relief in either the next few couple years or even out into the future. So that's included in there too. And then, like I said, if you look at the bottom of our plan, there's kind of like another financing uses, cost mitigation. That kind of goes over, some impacts if you modify some of our assumptions, if you include the debt refinancing opportunities, and other things that we were looking to do. And I can take any questions if anybody has any.
And I did, through the chair, just one quick other comment I neglected, Frank. Our superintendent Avery is on. Royce, Dr. Avery is doing a wonderful job. We're working in concert with the Board of Ed. They do face some serious challenges. We need your help on that. They need your help on that. And the mayor, I can speak to say, and Constance will tell you, and Dan, the mayor is committed to trying to work with them as best he can to try to help them along the way over the next year. But that is part of our challenge over the next few years. So I don't know, Constance, if we want to turn it to superintendent for a few minutes.
Through the chair, if that's fine, I think that would be a integral part of the conversation.
Yeah, that's good.
Can you guys hear me? Can you hear me?
Yes.
Yes. Well, good morning, everybody. Again, Dr. Avery, interim school superintendent, Bridgeport Public Schools. We did provide you guys a couple of documents. That one of the documents that Ken referred to is that 5-year forecasting for the district. And so I want to make sure that we look at some of the issues starting back in 2018 all the way up to the current status of the district. Last year, we had major cuts within the district to sum up a $30+ million deficit. A lot of programs was cut, a lot of personnel, eliminated due to the fact that we were at the end of our extra dollars as well, being able to kind of look at and forecast what needed to happen. So we had to, the board adopted some very major mitigation options for us to consider to reduce that, to get to that $37 million, deficit, bringing it back online. And I also provided some of those documents in my present in the documents I've provided to you guys as well. But just as I'll start with our projection for the current year. It's going to be almost going into fiscal year 25-26. We're projecting about a $22 million deficit. And then as we progress through that up through 2029, it's going to be up to an $80+ million deficit. And so we are struggling right now trying to figure out what our next steps are going to be. The state of Connecticut, we have the team are in the district working with us to try to figure out the best case scenario moving forward. So I'm very, very excited that they are here. We are, after this meeting this morning, I'm also having a meeting with the Deputy Commissioner to really kind of look at the processes and procedures and systems that we have in this district to make sure that we have a solid foundation moving from in the future. And so I'm very optimistic, working with my Chief Financial Officer, Mr. Nuquo, and again, the State Technical Assistance Team to really try to figure out a plan to move this district forward. And I do have to say, the mayor and his team, we've been in constant communication of making sure that we're doing the right thing on behalf of the city, and also working with the state again to make sure that we have a valid plan moving this district forward. And so, Chair, I'll send it back to you, and we'll be open to any questions as well.
I have one question, if you don't mind, Chair.
That's fine, Kim.
Bill Plummer, did we receive documents from the Board of Ed? I did not think that we had.
No.
Please correct me. Okay.
No.
So just so you are aware, we never received any documentation of your 5-year plan to this commission.
Let me double check. My executive assistant do that. I submitted them to the city as well, but if not, I'll get those over to you ASAP.
Chair Constance has her hand up.
Yes.
Yeah, through you, Mr. Chair. My apologies. Let me double check my email I had sent on Friday. Perhaps it was stuck in my outbox, but regardless, I will send that over to Bill right now.
Okay. All right. I'll open it up very briefly to the commissioners if you have any questions.
This is Marcia. I have a question. So you have deficits now. I'm just trying to figure out how real these numbers are. That you've talked about how you've done all the streamlining and cost streamlining, and you're taking the increase of supplies, let's say, from 3% to 1.5%. Is there something that backs that up other than just changing the number in there? And then Superintendent Avery talked about having deficits, but then you're cutting how much they're increasing, and it just doesn't. I'm having a hard time following that.
So in the current year, through the chair, Ken Flato again, we're working with the district. There were some funds that we're able to allocate back to them to help address this year's situation that we've been working closely, the finance teams together on. They had some extra funds in our, what we call our internal service health fund, which allows them to, in effect, contribute less this year than they would have. And that's part of how we're addressing this year. Structurally, going forward, we've got some work to do. No question about it. I don't know, Frank, if you want to address the supplies issue or the non-personnel side of the 5-year plan.
Yeah, I think you did a good job answering that. I mean, we just made assumptions to our plan to say, the cost could go up by inflation, but with office supplies and stuff like that. I think on the district side, I let Mr. Avery speak about it as to kind of his numbers and, talking about the numbers are real. I know that a lot of this comes from the increased cost of special education and outplacements. And the district is doing things such as the special education site that we're building in the city. But that site will not be probably ready to be in operation for like another 3 to 4 years. So we're kind of in this in-between period where we're doing things that we believe are going to address their long-term deficits. But for the results to materialize, it appears that there's going to be some time in between that we need to manage.
Any other questions from the commissioners?
Yeah, Mike, I have some questions with respect to the assumptions that were built into the 5-year plan. I see that the health insurance is assumed to increase by 8% and then 4 years at 6%. You have a very large healthcare bill. You're paying more than $30 million a year just to your retirees' healthcare costs, and your active employees are on top of that. You're also drawing money from the healthcare reserve fund. I think it entirely likely that there will be premium increases that may be in the neighborhood of 20%. Have you vetted these assumptions with your healthcare consultant? And what's your plan in case there is a significantly higher rate of healthcare increases. And similarly, your plan includes drawing some money from your self-insurance fund for workers' compensation. Has that been vetted with an actuary? And what's your plan if you have leaner reserves in case there is an unexpectedly high year, drawing from either self-insurance or healthcare reserves?
Yeah, through the chair, if I could. So we do have Siegel and Company that assists us with information and scenarios and forecasts each year, and we meet with them and the Board of Ed together to review that and then build that into our budget. So yes, we know there's a lot of risk this year. We did enter the state partnership plan about 7 years ago. At the time, it did achieve savings because of the magnitude of their ability to purchase on behalf of municipalities. We found over time, that somewhat, their costs are going up as well. So we do have a better ISF fund, much better than we had 7-8 years ago. We have a structural about $20-25 million cash, in effect, asset on the books as opposed to a deficiency that we had 8 years ago. We had about a $40 million deficiency. So I'm determined to try to keep that in the positive. But part of this is how we budget. We budget every health insurance position, whether they're vacant or not. So in effect, we always have a cushion of a few $1 million, for example, on the city side in our budget that ends up going into a vacancy reserve or into the ISF as extra money because we budget that extra money as kind of a safety valve. If it's 20% increase across the board for everybody, that's going to be tough. We're hoping it'll be closer to 10%, but you're right. There's a lot of risk right now.
We are also looking just at alternatives to the state partnership plan. We've kind of started that process. And, part of the state partnership plan is you can't kind of offer any other plan where maybe for some people a high deductible plan may be savings for them and savings for us, but you can't do that and be on the state partnership plan. So those are also things that we've kind of initiated throughout this process and through looking at our financial plan that we've asked for.
And I should mention, by the way, about almost 12 years ago now, the negotiations with the unions, employees hired since 2014 do not receive post-retirement health benefits. So, the city has taken steps to try to reduce the long-term liability and, the OPEB liability.
Okay. Anything else from the commissioners?
Just a quick question. Oh, sorry.
Go ahead.
Just a quick question on the education operating expenses. It looks like services were running in excess of 67 million up until this past year, and then dropped down to a negative 1,800. Could you just kind of explain what that's about?
And I, to be honest, I think this is something that the consultant is kind of coming in and helping the Board of Ed with. But, the city, when we calculate how much the city share that will go to the Board of Ed, they will, give me a number to adjust in the process and then revise their budget. So the numbers that I showed you are the original budget numbers. They're not kind of the revised numbers. So basically they had me adjust what we were going to give them all in one account. And it was a negative number, and then they kind of trued up their budget as they went through. But I suspect that in the future years, I think that procedure of budgeting that is the original budget is going to be truer to what their revised budget is.
So can I piggyback on that question? I was curious about the health insurance cost at the Board of Ed. Seems to go from 28 million to 56 million. And I was curious why there's such an increase.
Yeah, I think once again, I can kind of dig into those details a little bit more. But I think this is where I think that I think with the way the Board of Education has done its budget, I'm reported the numbers that are in the original budget for Munis. The total reflects what's actually budgeted, but I've found even more in the recent weeks that the revised budget is different. And so I think procedurally, like I said, I think the consultant is going to help, and I can refine these. But I basically in Munis, I use the original budget number, and that's what was reported there.
Through the chair. Mike, through the chair.
Yes.
Just a couple of things with regard to the education, and Ed, good point. I was actually looking at that myself with regard to the services. I guess a couple of questions I have is, the Board of Ed's plan to meet the MBR, it doesn't look like it with these projections. And I agree with Tony. I'm not so sure that the projections for the Board of Ed are realistic going forward in the 5-year plan. So I think when there are more updated numbers, could those be provided to this commission?
I think
And I
at
don't
this
know if the
point,
Board of Ed wants to oh, go ahead, Mike.
I think in the interest of time, with the agenda that we're dealing with, I just want to refer back to the initial ask, which was to provide a report to this commission outlining the strategies to ensure that the city will not require supplemental grants and aid in future years. And part of the strategy that's been presented, actually goes in the opposite direction with looking to seek additional state aid. And that's not to discount, understanding the challenges that the city is facing. And I do appreciate, on behalf of the commission, the representatives from the city of Bridgeport and the Board of Education that provided comments and an overview of the strategy. But I would ask at this time that, following this meeting, that there will be continued dialogue with Kim Kennison through OPM in furthering the efforts to, provide a strategy that the undersecretary is looking for. And Kim, do you have any additional comments to that?
No, thank you. I am totally in agreement. I think today we had an initial meeting with the town of Bridgeport with the secretary, and we didn't really hear any highlights on the Board of Ed. Today we heard some discussion about the Board of Ed, and it sounds as if the two plans have not merged together and that they need to merge together for the one overall entity for the city of Bridgeport, which then captures the Board of Ed side. I do understand that the Board of Ed has received some state oversight and that there are boots on the ground in Bridgeport to assist them from the State Department of Education is what I have learned. So I do think that there is some additional work that's needed and some revisions in this plan that has been provided, as well as the reliance on the state aid, Mike, as you had Chair, as you had brought to the attention, and one-time funding. It's not viable and sustainable, right? And Ken, I don't have to talk to you about this. I mean, you're an expert in these areas, so I think a revision is definitely needed. Thank you.
Thank you, Kim. With that, again, I thank the representatives from the city of Bridgeport and the Board of Education for your time today.
Thank you all.
Thank you.
Okay, next up is item number 4 with the municipal audit reports update as far as these submissions. Before turning it over to Bill, I would just like to highlight that we have hit the finish line with submissions for the 2023 fiscal year. with the town of Weathersfield providing their 2023 report on November 14th, their submission to OPM. So with that, Bill, would you like to provide us an update?
Sure. Mike indicate we have all the 23 reports in now, which is great. So we can move on with our municipal fiscal indicators. So there were originally 20 delinquent 2024 audit reports as of July 1, 2025. So since then, from July to October, 6 municipalities submitted their delinquent reports. And in November, we did receive Marlborough's financial and single audit reports. And Danbury has also submitted its financial statement audit. And they're still due, the single audit is still outstanding. So basically, there are 12 and a half reports that are still outstanding. We met with several of the municipalities that could not provide projected submission dates, and we have some meetings still scheduled with those as we're looking to at least have solid dates in place for the submission of those reports.
Okay, commissioners, any questions on the update before we address comments from 3 towns that have been invited to speak with us today? Okay, with that, for the town of East Lyme, who do we have on the call today? And if you could just provide us an update on what the plan is to complete and file the fiscal 2024 report.
And this is Marcia Marion. I'm not independent with respect to East Lyme.
All right. So
good morning, First Selectman, East Lyme.
Good morning, Finance Director Kevin Gervais. I believe my deputy, Mitch Nixon, is also on the call, just in case I drop off. And I believe Leslie Knoll, our audit partner, is on the call as well.
Okay.
So if I may, I would just like to share my screen real quick. On here. Can everyone see the audit timeline here?
Yes.
Okay.
Yes.
So we've been kind of keeping a running tally here for the last few audits of just trying to keep us on track with this timeline here. You can see right in the middle, we highlighted 11/15 conducting audit field work. Last week, we did have the auditors remotely working on open items and field work. We were able to send them a more robust final copy of our trial balance. So just to give everyone, just for people that aren't made aware of kind of where the town's been, the 2023 audit took approximately 13 months to complete. Our 2024 audit, we're projecting a 6 to 7 month time frame, and then doing the exact same thing, maybe even a little quicker time frame for the 2025 audit. In the last 2 years, so I've been with the town for 3 years. In the last 2 years, we've implemented a new accounting system, Munis. Within the last 4 months, we've implemented ADP to streamline payroll and HR functions. Within the last audit, one of the hangups was fixed assets reporting. There was duplicates going back to the 1930s. So with the help of the auditors, we went back and cleaned the entire fixed asset list. We adopted a new fixed asset software. We've also just implemented, as of 7/1, a new utility billing program to streamline the water and sewer operations, which is also one of the major hangups from the 2023 audit. We're happy to report the finance and HR offices are finally fully staffed. 2 weeks ago, we hired an employee benefits coordinator to complete our budgeted staffing. We have weekly calls with our principal, or I think he's a principal or a director, Michael Popham from CLA, to go over open items and just kind of keep them apprised of where we are. Let's go through my notes here. Like I said, the major hangups last year were fixed assets and sewer assessment receivables. Fixed assets has been addressed. We are still working on that sewer assessment piece. That is one of our open items we're kind of hoping to clean up in this audit. So some things we've done so far in the last year, we've implemented a capital improvement committee. We've adopted a fund balance policy. We've adopted a capital assets and disposals policy. We've adopted a coastal resiliency fund, and since I've been here, one of my kind of projects has been reducing the town's reliance on debt and leasing and increasing our cash capital. So that's something we've been working on. Things still to do. We still have to establish an OPEB trust. We have to work on a 5-year operating projection. We have that with the capital side, but we don't really have that with the operating side. And then one thing we're working actively now with this 2024 audit is building out a comprehensive year-end, audit checklist and closeout procedures. Just trying to think what else we have here. So with that, I did email. I know I did not submit anything for this meeting. I emailed over to just a few moments ago to Kimberly, Michael, and Bill these documents so they could be hopefully put into the attached to the meeting minutes. So you can see some of these items we have been addressing. And then last thing I'd just like to touch upon, because I know it comes up. I can't click here. Sorry, guys, I'm just trying to click through, is the town's fund balance policy or fund balance. The town right now, I'm projecting, right now we have about a 19 to 20% fund balance. Our fund balance policy target is 17%. If we use the entire fund balance in the budget, which is $1 million, it will drop us below that 17% target. So that's something to keep in mind, but we have not had to use that in years past. Every year since COVID, we've budgeted about $1 million. So these 3 years right here, we did not have to use that money. We're projecting we have to use that money for 2025. And I'm projecting currently right now, depending on what the interest environment is, to use that full fund balance for 2026. So with that, I hope I didn't cut out. I'm out of office right now, so I hope everyone heard all that. So does anyone have any questions or?
No, Kevin, thank you for the update. Leslie, are you able to just comment, does the projections that Kevin has put out there look realistic with wrapping up the audit and issuing the report, the 2024 report by the end of January?
Currently, right now, I feel it's a very aggressive goal. They still have to work on sewer receivables and some other things. So I don't anticipate that being issued by the end of January.
Okay. Kevin, do you want to comment on that? I mean, we're really looking, in order for you to and with Mr. Cunningham as well, I think what we're really striving for is for you to aggressively get the 2024 audit wrapped up so that you can then be on cycle and submit the 2025 before the end of June of 2026 rather.
Okay. I thought the audit firm and I were on the same page. Leslie, do you have a better realistic time frame?
Well, we need to be able to get all of your audit entries. I know that sorry, Mike had to be away for this meeting, but we just got your trial balance, I believe, last week. So we still need to go through it and make sure that we have everything that we need. That's just why I think the January 31st deadline is a very quick goal.
Okay, so if for the commission, I can meet with our auditors, and if Kimberly, if you want to join us, we can have a call, and all of us get on the same page and have a realistic expectation of timelines. I thought we had that.
Yeah, I think we're just, we're looking for, a priority focus, to the extent that you can. I know you've got the component of your day jobs, if you will, and before long, you're going to be dealing with the development of your next year's budget. But, if there could be a priority focus on this heading into the end of this calendar year, hopefully it'll play out so that you're in a position to look to finalize an issue, if not in January, February at the latest.
Okay.
If we get the information from Kevin, we will do our best to plow through the audit and get it done.
And if I may weigh in, Dan Cunningham,
Yes.
fortunate for me, I won the election, and I'll be.
Congratulations.
Thank you. Be careful what you wish for. But at any rate, I have the history for the last 2 years, and even before then. So I understand the significance of getting us caught up, getting us on track. I don't need to be educated as to how important that is. I get it. I'm on board, and we will work diligently to make this happen. So that we're good citizens here with respect to your panel. So definitely on board with this.
That's appreciated, and congratulations on your reelection.
Thank you so much.
Okay. All right, thank you. Next up is the town of Marlborough. Do we have town manager David Porter and interim finance director Linda Savitsky with us today?
Yes, David Porter is here. I don't think that Linda Savitsky is here today, but I'm happy to give you an update. It is a happy update this time. As Bill noted earlier on the call, we submitted our FY24 audit earlier this month. I believe it was the 6th or 7th of this month, and we have a kickoff call with our partners at CLA on December 2nd to kick off the FY25 audit, and we look forward to completing that expeditiously and getting back on cycle.
Okay. Yeah, very good news. Are you anticipating that you would be filing for an extension for the 2025 audit?
Yes. I mean, since we have our kickoff call or meeting December 2nd, I do not anticipate being able to submit it by December 31st. So we will need to file for at least one or even two 1-month extensions, but I do anticipate submitting it well before the June 30th deadline, so that for the FY26 audit we can get back on cycle.
Okay. Yeah, you answered my follow-up question was in regards to when you were projecting. So, certainly it would be great if you're in a position to be able to submit, be it by the end of the first quarter of next year on the long end.
That is certainly our intent. I'm hesitant to commit CLA prior to our December 2nd kickoff call. I know that I want to commend our partners, both Vanessa Rosito and Michael Popham. They have been doing magnificent work. They're valued partners, and I would like to remind members of the commission that we submitted an audit in April, now November. Look forward to submitting a third one, in the first quarter of next year. And if we meet that goal, which we will certainly do everything in our power to do so, we will have submitted 3 audits in less than 12 months.
Yeah. Okay, very good. All right. Well, thank you, Mr. Porter. We appreciate your time today.
Thank you.
Okay, and next up is the town of Wethersfield, and as was highlighted, fantastic that the 2023 report has been submitted. So just looking for an update to the commission in regards to what the plan and timeline is for the 2024 audit report. So do we have town manager Frederick Presley and finance director Michael O'Neill with us today?
And Mike, for the record, Wethersfield is a Milliman client.
Okay, thanks, Becky.
Good morning, Mike O'Neill here.
Good morning.
I know Fred's on the call, or he was earlier. He may have been taken away, but I will proceed. As you mentioned, we just this month finished and issued the 23 audit report. We did have some preliminary discussions with Kim and CLA about a kind of soft timeline for 24. We're about, none of the field work or planning has been started for that. We are, in terms of preparing for the audit, plan to be ready in January, early January. I think I had previously reported that we have about 75% of the work done for the year-end audit. Really, the only open things are the tax collector's report, the medical and OPEB accounting, capital assets, and compensated absences. And those are things that we're working on presently, and really see no reason why we could not get things started with CLA in early January if they're available.
Okay. I'll open it up to the commissioners. Any questions? Okay. All right. Well, again, we're certainly pleased to see that the 2023 is now behind us. You know, as was discussed with the prior town, you know, really it's you've got to figure out how you can manage to get back on cycle with wrapping up to 2024 as soon as you can, and then, you know, proceed accordingly with 2025.
So we had 3 schools approved at referendum in September, so we expect to be in the bond market next summer. So as I explained to Kim, we are highly motivated here to be done with both 24 and 25 by the end of June. You know, that's what we're going to target.
Certainly, that's good to have that additional motivation. All right, thank you.
You're welcome.
The auditor might be on the line. Chairman, just so you're aware, it's probably from CLA. If Vanessa is with us today, I think it is going to be her last meeting today with us. And I do want to add kudos to CLA for their hard work working with Weathersfield to get this completed and really getting through concurring partner quality control review. And her and her team definitely helped make a difference here.
Yeah,
I think Michael would agree with me, O'Neill.
I do.
Yeah. Vanessa, are you on the call?
Yes, I'm here. Can you hear me? I'm driving,
Yes.
so.
All right. No, just on the behalf of the commission, we also second the comments of appreciating the efforts that you and CLA had in getting the 2023 audit across the finish line. Certainly we wish you well. I believe the word on the street is that you're going to be retiring.
Yes, that is true.
All right. Well, congratulations, and we wish you well.
Thank you. I should note that Leslie Zoll is going to be the new principal with respect to actually Weathersfield, Marlboro, and Bloomfield. So she is going to be involved in any meetings that we have with the respective clients through the end of the year.
Okay. All right, Leslie, we'll look to speak with you on the upcoming meetings, I'm sure.
Of course.
Okay. All right, next up we have the City of Ansonia. Who do we have on the call from Ansonia today?
Mr. Chairman, it's Kurt Miller. I also have Rich Bashira, Kim DiStefano, and our superintendent, Joe DeBacco, as well as our auditor, John Acabella.
Okay. All right, thanks.
Mike, excuse me, it's Glenn. I just need to tell you that City of Ansonia is a client, So I'll have to excuse myself. And then I also need the record to show that the city of Bridgeport is also a client of my firm.
Okay, thanks, Glenn.
Mike, I'm sorry. Likewise, the city of Ansonia is a client of Milliman's.
Okay, thanks, Becky. All right, Kirk, how do you want to proceed? Do you want to give us a status update?
There's obviously been some changes in Ansonia, so we'll go through those quickly. Give the board an update of what's going on there, and then we could certainly take questions. I know there's some different topics you'd like to go through, but to start, will be a new administration taking office in December. I have not had the opportunity yet to speak with the mayor-elect, so I'm not sure the status of some of the staff members. So I'm not sure who will be with you for your next meeting. We are working to put as many documents and things together for that administration. So hopefully it will be a smooth transfer of that. Kim will remain absolutely on staff. So there will be some consistency. Obviously, John and Dr. DeBacco will be here certainly through the transition as well. Myself and Rich, we're waiting to understand exactly if we will be retained or not. But once we know that information, I'll certainly pass that on to the board through Bill and Kim, so that way they are aware of what's going on. On a positive side, for the first time in 15 years, the city of Ansonia is no longer a distressed municipality. I believe as in 2019, Ansonia was the #1 distressed municipality. So being able to get up that list is certainly an accomplishment. And, kudos go to everyone involved. I know that some people question some of the strategies that Mayor Cassetti has put into effect. But I think what we've seen is there's been a positive change in the city of Ansonia. A lot of those underlying demographics have strongly improved. That's a compliment to everyone involved and certainly a feather in the cap for the entire city. With regards to our audit, things are, and I'll let certainly John Acavella speak more specifically to that. Things are moving along for the 2025 audits. We have a few things outstanding that we are working through getting completed. John feels very hopeful that we should be able to have this all completed by the end of December, which would be certainly a good thing, because I know that's one of the biggest issues that this board had and kind of brought us here at this point. So the biggest outstanding issue that we had. So it'd be great to have that corrected, have a timely audit. With regards to the financials for fiscal 26, we've included both revenue and expenses for that. As you can see, everything as it stands is in very good shape. I mean, a lot of the things that we track, which can have huge impact on the budget, as you all know, employee benefits, utilities, things like that, are all in line. We do have some energy efficiency projects that came online, particularly carports in the downtown area, which is going to have a very positive impact on the budget for electricity. You're already seeing that that's starting to trend extremely positive. So we expect to have a nice fund balance or in that account. With regards to the WPCA, I included a chart that shows the projected use, and the projected use of those funds. I know that was a request of the commission. We can certainly run through that if anyone has any specific questions, but I think the spreadsheet itself is pretty straightforward. So with that, Mr. Chairman, I'll turn it back to you for any questions that the board has, and then I'll have folks jump in depending on the question, who's best suited to answer that question.
Okay, thank you. And before opening it up, just what are your projections for 2025, the year-end results?
I'll let Kim, if you want to jump in and give specifics. It looks like we're going to be in very good shape for that. But Kim, if you want to talk more specifically.
Sure. You're probably interested in the fund balance. At the end of 23, we had a fund balance undesignated and designated of about $6 million. As of June of 24, we had a 7.9 undesignated plus designated fund balance. This year, a lot will depend upon us closing out the WPCA. Their fund will close at the end of June of 25. That means taking fixed assets off the books and merging whatever remains after expenses and that type of thing from their bank accounts will move over to the city as now is part of our fund balance. But all of that requires a lot of work to take things off the books and make sure everything is done right. So we should be in good shape. I can't give you an estimated, but each year it has increased without this amount of money coming over from the sale. So I would think conservatively, we should be in even better shape and probably should know better by the end of December or our next meeting exactly where the fund balance ended up being.
Okay. I'm going to open it up individually to the commissioners. Tony?
The first, I have a technical question. The budget report says from date 7/1/2002. And I just want to make sure that, and to date 10/24/2025. I just want to make sure that it's maybe that I don't know if it pulled in just the right year. That's my, I guess my point. If you look at the top of it.
You're right. That is strange that it did. I think that was just the entry, but obviously whatever was pulled was just from that database. So it was only for that fiscal year.
Right.
Sorry about that.
Yeah, that's okay. I just wanted to confirm that.
I didn't even notice that. Thank you. The other ones all say the correct years. You see the 25, the 24 is all listed, but yeah, that first one.
Okay. And I know you sent the spreadsheet, but from just looking at these budget reports and not knowing a lot of the background, the transfers in and transfers out and use of future revenues and all the large sort of swings here are just a little difficult to follow, I have to say. And so I just want to make that point. And I was trying to sort of cross-reference it to the spreadsheet that you sent. And so I guess just generally you're bringing money in and sending money out. I mean, what's the...
We use the general fund primarily to funnel everything through, and they'll usually come into the general fund by ACH or wire, whatever happened to be. Wire was what was done with the sale, both of the down payment and the actual sale for the WPCA. So it'll flow into the general fund and then flow out to whatever fund it really should belong to. So in the case of all the funds that we had received from the sale, we moved over into the WPCA account so that we could close out that fund. So everything was put into a money market on that side. So once we're finished with that, then we can move it back into the general fund where it'll properly belong afterwards.
I see. And is this part of it's the revenue stabilization and capital reinvestment? Is that part of the use of the proceeds?
That's correct. 7 million of those the 41 million that was paid for WPCA, 7 million of that was allocated and put into a separate fund for rate stabilization, since that'll go on for about 10 years. So we did segregate that out. So we moved it from the WPCA fund into the new rate stabilization fund. And we issue checks out of there monthly for the credits that Aquarian is putting on each of the taxpayers' bills.
And is the revenue stabilization, if you look at the chart, the middle, the $5.2 million projected revenue stabilization?
The rate stabilization was the $7 million.
For 25.
So, Kim, he's talking about not the rate stabilization, but the revenue that we're using in the budget.
Okay,
so do you anticipate a sort of a fiscal cliff coming forward if you have $5 million in 26 for 27?
I'll take that one, Kim. The plan as it currently stands, and in the adjusted 3-year outlook budget, is to step that down, and it will be gone over 2 years. So we're just going to slowly step out of that to where there'll be no more dependence on one-time revenues other than use of some fund balance to address contingency or one-time capital purchases.
So the 5 million will step down to lower amounts until eventually it goes down to zero?
Yeah, if it goes according to plan for fiscal 29, there will be no more use. So we'll need 2 more budgets to do that. For
Okay.
fiscal 27 and 28. Yeah.
Okay. Sometimes that's a difficult thing to maintain, but
Yeah.
thank you for clearing that up.
Oh, absolutely. Good question.
Marcia, did you have a conflict with this town, or are you good?
I am good. I had a question that last meeting I had asked for a 5-year projection of your general fund just to show that step down and how that would affect the taxes. And I didn't see it in the package. Do you have that?
Yeah, I do. I apologize, and I'll send that to Bill and Kim immediately, and you'll have that right away.
Okay, and that would
Absolutely.
show what Tony is asking about too. And
Yes.
then you had $6 million in 25 that came in for bonds. Was that spent by June 30th
Kim?
on the projects?
You want me to answer that one, Kurt?
Yeah, please.
Okay. Yeah, bulk of it was spent by the time we hit the 6.1 was due, as they were bond anticipation notes. So at that point, we not only bonded for that, but we also bonded for the additional projects that were ready to go as well. So there was a big, do you remember how much that was, Kurt? 28 million?
Yeah, I believe just under
Yeah,
29 million.
we got about 28 million again in bands to fund both whatever remained of the 6.1 projects, as well as going forward with the new projects that were up and running.
All right, just looking quickly, that I would think your fund balance, again, trying to take all these transfers in and out, it looks like your fund balance may have gone down during the year. Not as bad as if you hadn't spent the 6 million, but that would be something that I would be concerned about, is where your unreserved fund balance is at June 30th of 2025.
I'd have to take a look at more of the detail to answer that question. Like you
Okay.
said, there was a lot going in and out between the WPCA sale and the 6.1 million that we got in bands as well, which would have moved over to the capital fund at that
Right.
point. But it would have
And then-
flowed through the general fund.
And then maybe just consider using the due to, due froms instead of showing them as revenue and expenses. Then they don't show up on your income statement. But they can still go in the same bank account.
Right. Okay. Thank you.
Ed?
Thank you. Just kind of following up on Tony's questions on the transfers in and out. I think there was about 45 million in 25, and then looks like for the budget, another 22 million for 26. Is that all WPCA money, or there are other things flowing through there as well? I'm just trying to kind of wrap that around my head a little bit.
Yeah, the 22 million that came in 25, that would be, the bulk of that is all of the new bonding that we did for the bands. The bands were the 28.7, but we needed to repay the 6.1 plus interest. So the bank held that in a separate account. So they gave us the net amount of the $22 million when we got the new bands.
Thank you.
Diane?
Everyone kind of covered the questions that I had, but I do agree with Marcia that maybe the bond proceeds should not be run through the general fund the way they are. So maybe talk to your auditors about how to handle that going forward for budget purposes. I'm all set, Mike. Thank you.
Okay. All right. Yeah, I think the commission's not going to be meeting again until February of next year. So, the hope is that between now and then, there'll be some clarity that'll come of the end result with fiscal year 2025. And certainly, I would imagine with your auditors, as far as where some of the funds ultimately land, that'll be accounted for. I would imagine some of these transfers would ultimately be netted out with the reclassification of the funds into the designated buckets. But, certainly, we anticipate, getting some clarity as far as the end results of operations, factoring in what you're actually taking in to the general fund from the WPCA for the 2025 year. Okay. But, so Kurt and Kim, thank you for your time today.
Okay,
No,
thank you.
thank you for being here. Thank you for working with us.
Yes, thank you.
Next up, we have Derby. Do we have Mayor DiMartino and Finance Director Brian Hall with us?
Yes, good morning. How are you?
Good, thank you. Good morning.
Excuse me, Mike. This is Glenn. I have to also excuse on Derby. They are a client.
Okay, thanks, Glenn.
All right, so if you don't mind, I'll just make an opening statement. The recent election sent a clear message from Derby residents. Fiscal discipline, even when challenging, is strongly preferred over unrealistic budgets and reoccurring deficits. Every member of my party and I were reelected by a nearly 2-to-1 margin, which gives me confidence that the progress we've made over the past 2 years will continue throughout my next term. The 2025 audit is well underway. The city submitted all requested initial information to our new audit firm on time, but the auditor had been helping Hamden with their audit, and it is to be determined the impact of the timing for Derby. We are now fully staffed in the Finance Department, Tax Office, and Board of Education. The city's new financial system core's functionality is working well and will continue to look at ways to use more of its features. The reconciliation process with the Board of Education has gotten better, but they are still working with a consultant to fix issues found in past audits. This remains a priority. I would like to turn things over now to the Finance Director, who will give you a quick update on the report submitted to the board and answer any questions you may have.
Hello, everyone. Good morning.
Hi.
Just as a quick update, right? The 2024 audit, or the 25 audit, I'm sorry, is in flight. We talked about the numbers haven't materially changed from the last time we talked. We're still projecting around an $800,000 surplus for the year. I think the current year is on track to budget. It's still a little bit early, but not anticipating any issues that have come up so far, which is great news. I think if anything, again, we're on track for some more upside based on some high level estimates that I've been preparing. And then lastly, the next budget cycle is in flight. We've started some of the preliminary work for Derby. This is a reval year, so obviously that's going to come with some challenges. Mayor DiMartino and myself were evaluating some other possible exemptions to help out certain Derby residents. Maybe even the homestead exemption that I know is kind of new, but it seems very promising. Help out some of the Derby residents that live in their homes and own their homes, and we think that's is a great option that we're absolutely looking at. But as you can imagine, timing's a bit of a challenge, so we're doing the best we can on that.
Okay. Is that reval underway?
It is, yeah, absolutely. We should be getting some preliminary numbers. I was asking about today, but really soon the letters are going to go out. We're going to, the residents will start getting informed about the new values of the property, and then we're going to work with the board to again, maybe see if we could do something with some of these exemptions to help out.
Okay. Just a couple comments. Mayor, congratulations on your reelection.
Thank you. I appreciate that.
This commission has certainly noted the progress that has been made, and with some of the great efforts that Brian has put in over the period of time that he's been involved in with the commission. Before opening it up to the commissioners, there's a a requirement, a next step, if you will, in the process that, we wanted to just bring to your attention. And that's a requirement to develop a 5-year plan. And the suggestion I would have is, a nice opportunity would be to time it out with the development of your 26-27 budget. It's, when there's a lot of focus in on what things are looking like, what they're projected to look like. And it would provide some efficiencies, I think, in developing a 5-year plan that the commission would be looking to have submitted through OPM once it's developed. Certainly, Mayor and Brian, I would offer up to not only OPM, but the commissioners on board, if you have any questions, if you'd like to see samples, certainly we can provide assistance in helping you get there.
That would be great.
Yeah, no, thank you. And I think that timing will work out perfectly. So I'll add that as we work through this budget process to get the 5-year plan.
Yeah, and if you can just make a note, for our update meeting in February, if you could, share some thoughts with us as far as, how that's progressing and if it looks like you'll be able to get it done for or in conjunction with the development of the 26-27 budget.
Sure, absolutely.
Okay. All right. I'll just open up to the commissioners as a whole. I know, Glenn, you have a conflict, but commissioners, do you have any comments or questions at this point?
Nope. Congratulations.
Thank you so much.
Great work.
Thank you.
Yeah.
Brian's done a great job, and we're so lucky to have him, and he's really turned it around for us.
We'll be in touch from OPM and we'll set up a meeting with you.
That would be great.
Okay.
Okay. All right. Thank you both.
All right. Thank you.
Okay.
Chair,
next up
I wanted to give you I wanted to give you a time check that we are on schedule and actually a little bit ahead, but that's it. I just wanted you to be aware.
All right. Thanks, Kim. Okay. For Hamden, who do we have with us today?
Good morning, Lauren Garrett, Mayor, and I have with me Rick Alarza and our accountant Naveen, and I believe the auditor is also online. Kyle Connors.
Yes. Good morning, everybody.
All right. Good morning, Mayor.
Good morning. All right. Did you want me to just give an overview?
Yeah, that would be great. Why don't we start with that?
Great. Thank you. All right. So we've been working diligently on the fiscal year 23-24 audit. We had our former auditor in several times. I believe the last status as of just yesterday was that the all of the funds have been completely reconciled from our issue was that the fiscal year 23 audit was the beginning balances were not the same as the ending balances. And so we needed to have our former auditor come in and help us get that all cleaned up so that when our new auditor was looking at the fiscal year 24 beginning balances, they matched with the fiscal year 23 ending balances. And so I believe that on the town side, that has been completed. Now tomorrow, the former auditor is going to the Board of Ed to get them all on track. And so we've been having meetings with some MFAC members either weekly or every other week, and with both of our auditors, and that's really helped us to move things along. I really appreciate those meetings. So I think that we're in better shape for fiscal year 24. and waiting to hear from CBIZ as to when they can get our audit completed. And for fiscal year 25, we're in really good shape, just dependent on when the fiscal year 24 audit is done so that they can start fiscal year 25. But finance has been doing a lot of work on fiscal year 25 because most of the work that needed to get completed was with the former auditor for fiscal year 24. I've been working with and communicating with the incoming mayor and making our personnel, our HR office available to him so that he can do outreach for a finance director and then schedule interviews, hoping that he can hire somebody as soon as he comes in. So that work is also going on. And then we also sent in budget to actuals for fiscal year 24, 25, and 26.
Can you or your current auditor speak to, are any of the balances as of June 30th, 2023 changing? Or was it just a matter of getting some entries in to match up?
The latter. So our former auditor has said that the audit is correct, and the issue was that there were adjustments that had to get made, and those adjustments were not made. And so the audit was posted without the adjustments having been made by the former finance director. And so when the former auditor came in, he was looking for all of those adjustments that had to get made.
Okay. Are there thoughts on the timeline for wrapping up 2024 and having it completed and filed?
I believe that on the town side, we're in really good shape. I have less information from the Board of Ed side because the former auditor is going there tomorrow. We have a meeting scheduled on Friday, and I think we'll be able to give more information then.
Okay. Kim, for the next meeting, could we look to request somebody from the Board of Education be on the meeting agenda?
Yes, in fact, I thought they were attending, but I could be wrong. Okay. Will do.
And as far as the results for 23-24, are you still projecting a quite substantial surplus?
Yes.
Okay. Okay, I'll open it up on an individual basis to the commissioners, starting with Glenn.
My concern was along the lines, and I think the mayor may have addressed some of this, is the staffing of the finance office. With the finance director being out and not being able to do anything to come in. And so it kind of looks like a lean staff at this point, and kind of makes that a challenge keeping to those dates with those audits. Is there any thoughts of bringing additional help in at this time to fill some of those spots?
Yeah, so we put in a request to the Legislative Council, which they approved, to hire an additional accountant. And so we're working with the union to make that job description as helpful as possible to the town. And updating, because we'll have two accountants, so updating the job descriptions. And I would say that townwide we're pretty lean, not just in the finance department. We try to do as much as possible with little staff, but I do recognize that the finance department needs more staffing. We have staffing similar to what the town had probably 10 years ago. But we've also brought in like $70 million in grants, and the budget's grown by $100 million. So it's a lot more transactions with, the same staffing. So I think that is something that's going to need to change in the next budget.
Thank you.
Diane?
No questions.
Okay, Ed?
Just kind of follow up on the fund balance question. I just want to be clear. So we're saying that the total fund balances didn't change. It was just an allocation within the fund balances that had to be adjusted? The various fund balances?
Can you, which year?
Well, I think you were talking about 2023. 2024, let's see, 24 audit, 23 year-end budget, fund balances didn't agree at the beginning of 24 fiscal year. So is the numbers on the financial statements correct and not going to be changed? Or is it, again, is it the total fund balances, what they are in the audit, and then within different components of the fund balances, are they changing?
So my understanding is that from the previous auditor is that the audit does not need to get changed or corrected. It's that the information that was in Munis, that is what had to get changed. Okay. So those changes have been made.
Okay. Good. And then I think Mike had asked that there was I think you indicated there was a surplus for 24. Kind of looking through the materials, there's for every year, there's all these applied fund balances, and then also cost savings that are part of the budgets that were presented. So for 24, does that surplus net of the transfers in or before transfers in?
The fiscal year 24 is a very positive year for us. We've had, I believe, 3 very positive years. Most of that is because the fund balance went negative in fiscal year 21. The town, previous to me, put together a plan to reconcile all of this to improve the fund balance. Part of that plan was to restructure debt, pay the full amount of debt, but use the restructured debt service to put money into the fund balance, so that there was a plan for every year money going towards the fund balance. And then we exceeded that with some budgetary savings and revenues coming in a little stronger than anticipated. So fiscal year 24 is the final year of that debt restructuring plan. And so there is organic and inorganic surplus for those 3 years, which is why our fund balance grew very nicely. So fiscal year 25 is does not have that that debt service and debt restructuring plan where money is intentionally going towards the fund balance.
Right, but I think.
I'm sorry, Ed. Was there an appropriated use of fund balance for 2025?
Yes.
Okay.
And for 2024 as well, or not?
For 2024, I believe there may have been movement of fund balance towards capital that flowed through the operating budget, and that was planned.
So, Mary, would you like me to get into the financial details of the fund balance?
Sure, please.
Okay, I appreciate that. Let me just clarify our financials. For fund balance 22-23, we were audited at $36.4 million. And for fiscal year 23-24, that we haven't had the audited release yet, we're projecting around $9.8 million net favorable after all the transfers in and transfers out. So that puts us around 46.2 favorable as we conclude fiscal year 23-24. Okay. As we close out fiscal year 24-25, that's last fiscal year, we're projecting, and I sent the forecast this morning to MFAC with all the details for the previous year, the current fiscal year, and the upcoming fiscal year, so you can see all 3 years projected out. So going back to the favorable fund balance for the last 2 years, when we get into 24-25, we're projecting an unfavorable year of around $18 million net loss, because we had a lot of transfers out of the fund balance that council did appropriations for. I listed them all out. In 24-25, we used $7.8 million to build the budget one-time revenue that came back to us as an issue for 25-26. We transferred out to the pension fund $4.9 million out of the fund balance. We netted out $400,000 for employees' cash outs out of the fund balance. We netted out town utilities for $253,000 out of the fund balance. And then we also passed a board capital improvement program for the capital improvement projects of $2.9 million. That equals $16.5 million. Then the council also appropriated to the Board of Ed for sports activities $48,000. And the net change between revenue and expense, the offsets are like around 1.3. That's how we arrive at the 17.9 loss for 24-25. And then in the current fiscal year, 25-26, the council appropriated $9 million to use out of the revenue side as a one-time revenue. And they also appropriated on the expense side negative $7 million as an expense reduction to sort of balance out the budget. It was a one-time line item expense line. So that would bring your fund balance at the end of the current fiscal year to be around $12.3 million after everything's netted out. And the town has a fund balance policy of 7%. So if you take 7% based on the actuals for 24-25, you will need roughly around $22 million to be in compliance with our fund balance policy. And the variance is $10 million that we would be short on that. So as we conclude this fiscal year, we'll have around $12 million favorable in our fund balance. And the forecast that I sent out to this morning to the MFAC will highlight next year what we're facing for 26-27. I don't know if you want to get into the ensuing fiscal year or not, but we should end by June 30th of 26 around $12 million favorable on our fund balance. Net.
So the savings of $7 million, is that just a number that's thrown in there, or is that something you can identify and back up by actual expense reductions that have been incurred during the current year budget?
Yeah, I don't have, the finance department didn't receive any details on that $7 million from the legislative council. It came over as a one-line item. I'm the finance department independently. I can speak, I guess, independently of probably the administration and legislative council. We're projecting that's going to come out of the fund balance because if we haven't achieved it now, and if we start working toward that, we're chipping at it little by little. But if we can't realize the 7, when January comes, I mean, it's almost like having to find double because we're midway through the year. So in our analysis, until we do realize expense savings and we start identifying them, putting them aside, just for full disclosure and transparency, we're identifying that loss to come out of the fund balance.
So for 26, then you're taking the $9 million out plus $7 million. So you're taking about $16 million out of the fund balance.
That's correct. Yep. So
did I misunderstand? Yeah. So what did you project the fund balance to be at the end of 2025?
At the end of fiscal year 24-25, which will be June 30th of 26, I'm projecting that we're going to have $12 million in our fund balance. Okay. So when you get into
wrong year, Rick. For fiscal year
25-26, I apologize. Our fund balance for 25-26 will be projected to be $12 million, June 30th, 2026.
Previous year.
You
Fiscal
want to
year
know what the
24,
balance is
25.
for what fiscal year?
What's the projection?
$17.9 million shortfall.
Yeah, for 24, 25, that's correct, 17.9, yes.
And I
we have-
apologize, Chairman. This information was not shared with MFAC. It came in, I think it was just this morning.
Yes.
So it has only been shared with OPM. So I apologize, Michael.
Yeah, we do as well. I mean, we have a lot of details that we provide in the Munis reports, but we were trying to summarize, last fiscal year, the current year, and the ensuing all at once, and it took a little bit longer than we anticipated. So, I mean, it was really on us, and I appreciate you accepting it, and I forwarded it to Bill this morning.
So for year end 25,
I'll be more than happy for detail. It's not a problem, but I appreciate you bringing that up.
just to kind of follow up, for year end 25
Sure.
and 26, you're projecting roughly each year to have about a $16-17 million deficit.
Yeah, I think the challenge for the town, since we
Is it-
utilize.
Is that what I said true? I just want to make sure I understand that.
That's fair.
Yeah,
That's
okay.
a fair statement, because if you use one-time revenue to balance a budget within a fiscal year, okay, your expenses are still at X level. So the ensuing fiscal year, you're gonna need to make up that 9.
Yeah, I
So you
understand.
either go back to your fund balance, or you make expenditure cuts, or you have to, raise taxes. One of those three usually is that's usually the strategy behind developing a budget for the new fiscal year. So when the clock comes around and we have to develop the budget for fiscal year 2026, 27, we know that 9 was one time. We know that 7 wasn't, realized. It came out of the fund balance. You put those two together, you're at 16. That's your starting number. Then you have to realize the growth of the town, which is about 4% growth on that. And if you want to get back to your fund balance policy of 4%, you have to make up that value too. So we in the forecast, I'm projecting that's a $38 million need and we also have a phase in town 4-year approach. So next year is the second year. So we're projecting our mill rate value is around $4.6 million a mill.
So I guess, it seems like the theme, even from the prior meeting, we had talked about the fund balances and the use of the fund balances as part of supplementing the budgets. And it appears like it's continuing to kind of either be at the same level year by year or increase a little bit. And it seems like that needs to be addressed somehow.
Yeah. It was utilized in 24, 25. It was utilized in 25, 26. And, like I said, we're going to have 12 remaining. So, I don't, it's really a legislative decision on how much of that gets utilized for 26, 27, or administrative to legislative council decision. But I understand where you're coming from. And we feel the same way. We implemented the debt service policy a couple of years ago to grow the fund balance and to increase our bond rating. And we got several challenges by utilizing and tapping into the fund balance to just keep the operating department going. So, I mean, it's a decision that, it's an executive decision or legislative decision that was made at the time to utilize the fund balance.
Ed, are you good?
Yeah, thank you.
Okay.
Thank you.
Becky?
I have no questions, Mike.
Okay, Marcia?
Could you give us a schedule of that fund balance? I was trying to follow it as you were talking to Ed, and I had you starting on June 30th of 24 with 36,000 of fund balance. And
Yes.
if you're taking
We'll share it with you.
16 or
going up.
17 out.
Yeah, we're going up from the 36 is a start. We're going up another 9.8 for 23, 24. So
Okay.
you put those two together, you get 46.2. Then for 24, 25, we're projecting a net loss of 18. You net the 18 out, you get around 28.2, okay? And then you net out the 16 that we took out from the 28.2, and you get 12.3 as a remainder. That's what we're going to end up with after fiscal year 2025, 26. assume, sometimes we do a little bit better on the income. Sometimes if we have vacancies, we do we try to do a hard, we do a hiring freeze, things like that. And sometimes our medical comes in a little bit more favorable. But right now with everything so early in the year, status quo, full disclosure, we wanted to include everything. And the challenge, or not the challenge, that what we're working on is chipping a little bit away at that 7 million to offset that loss out of the fund balance.
Okay, and then just the projection that for 26 shows that you will hit the $7 million, but on the reports that you gave, but you're saying that the projection is you won't hit the 7 million.
Well, what we're going to end up with is around $12 million in our fund balance. What we're stating is that if the town wants to put its fund balance policy at 7% back to normal, we'll probably need at least $10 million. Okay. And if we're restoring the 9 that we utilize as one-time revenue, that would be another 9 million that we have to come up with, right? Because when we go into the year, if you take that 9 out, you're $9 million short on your income compared to your normal expense without any growth included. And then the 7 million, which is in the budget, that has the budget's really at 711, and it's shown at the budget is really at 311. It's shown at 304 because we have that negative 7 million. If that negative 7 million is not realized in the fiscal year, that pops back up. And you're back to a higher level on your expense side, so you have to address that. You know what I mean?
I'm following you. I'm just saying that in your projection, you're projecting that you save all 7 million. But
Right,
I followed
Tony?
it. Thank you.
Yeah. Mike, I just wanted to just sort of state, I think, which is a concern shared here on the board committee, that with this overuse of one-time revenues, staffing issues in the finance department, and a challenging revaluation is not a good picture, and concerns for the 2070 budget year that I have.
Yeah. I think very significant concerns. Seeing a fund balance that was at a high of 46.2 million down to 12 million as of the projected end of fiscal year 26, plus what's been highlighted as far as a severe budget gap going into 26, 27. Kim, I would just ask if the secretary is good with it, to look to have a meeting as soon as possible with the new mayor and with Rick. It's in the blink of an eye, they're going to be dealing with the budget development process for that subsequent year. And there is as what's been discussed and is clearly evident, there's a major problem that has to be contended with.
Understand.
Otherwise, that fund balance of 12 million is going to disappear.
That's right.
On behalf of the commission, Mayor Garrett, I would just extend our thanks and appreciation for your many visits with us, and your clarity and transparency and your efforts during your time as mayor and in dealing with this commission. So I thank you on behalf of the commission and do wish you well with what comes next.
Thank you so much. I wish I were going out with a better forecast.
Commissioners, any final thoughts in regards to Hamden before we wrap up with Hamden?
We will schedule a meeting.
Yeah, thank you, Kim. I think it's critically important that happen as soon as possible.
We actually have a meeting on the books with them for Friday.
Okay. And Rick, thank you as well.
Appreciate your time. Thank you for your support and understanding.
Okay, next up, we have the town of Plymouth.
And
Who
Mike,
do we
for
have
the-
with us today? I'm sorry, Kim?
Sorry. Mike,
Oh.
for the record, Town of Plymouth is a Billerman client.
Okay, thanks, Becky. Okay, who do we have with us from Plymouth today?
The finance director is here. I can see VJ.
Okay. There we
Yes.
go. There we go.
Good morning, all. It's nice to meet you all. I have a newly elected mayor, David Sikorsky, and I have my accountant, Mary Jane, and our auditor, Kyle Connors, is here as well. So I would just like to take a moment to introduce the town's Plymouth's newly elected mayor, David Sikorsky. Mayor Sikorsky brings a deep and long-standing commitment to our community. He has been a resident of Plymouth since birth and comes from a family with a well-respected history of service in our town. Professionally, he served for several years as a director of travelers before his recent retirement, and he has an extensive record of public involvement, including service on the Board of Education, Town Council, and Board of Finance in the town of Plymouth. Earlier in his career, he also spent time as a coach, role that further reflects his dedication to community engagement and leadership. As finance director, my team and I look forward to fully supporting Mayor Sikorsky as he's transitioned into his new role. We are committed to providing him with a complete understanding of town's internal control structure, financial policies, and operational processes. In addition, we will work closely with him to align the town's financial planning with his priorities, including the careful development of upcoming fiscal year 26-27 budget. Our goal is to ensure that he has the financial insight and collaborative support needed to advance his agenda and continue strengthening the town of Plymouth. So with that being said, I will have Mayor say something.
Thank you for that very flattering introduction. Thanks very much. It's a pleasure to be here. I look forward to working with BJ, obviously, his staff, and this committee to complete our ongoing efforts. And of course, thank you. Well, thank you. Shout out to Kyle Connors, our representative, who's helping us get the audits back on track. So it's great to be here. I'm still getting my feet wet, as you can imagine. There was no time really between the election cycle and the inauguration cycle. So here we are. But I assure you that I'll work with VJ and his staff to get any questions that might be put forward. VJ will handle the meeting for the most part today, but if I'm unable to stay here for the balance of the meeting, I'm sure he'll get back to me with any follow-up that's necessary. Thanks, everybody. It's a pleasure to be here. Thank you.
Good morning, Mayor, and congratulations on your election. We do hope it's a smooth transition and you're able to, move forward with the interests of the town and the objectives that are in front of you. This commission is here to assist, certainly with VJ, as if he has questions or would like direction on where to get some resources or guidance from. It's certainly our full commission is available to support and help. In regards to the meetings that we have, it's generally an opportunity to check in on the status of completing the fiscal year audits, analyzing the results of the fiscal year, and also tying into how that's incorporated with the budget development process for the subsequent year. So with that, VJ, if you could, and also with the benefit of Kyle from your audit firm, if you can give the commission a status update on what
Yeah,
it looks like for filing and completing and filing the 2024 audit.
absolutely. Is it something, Kyle, do you want to speak? Because I think we have the agreement with our auditors that we will be able to issue the final draft, the final copy of the audit financials by the end of this month. Is that true, Connor?
Hi, good morning, everyone. Yeah, that's accurate. We have provided a draft of the financial statements to the town and Board of Education for their review. And currently that draft is making its way through our firm's quality control process, which can take a couple of weeks, especially this time of year being a little bit more chaotic, a little more hectic. But I think that's a good landing spot for the financial statements. We're also working through the 2024 state single audit and federal single audit. We've made a lot of progress on that, and I would expect both of those reports to be issued this side of the calendar year.
Okay. Are the projections still in line with what was last projected at 800,000 for 24?
I'm just pulling it up now. I should have had it in front of me. It looks like, barring anything changing, at this point, the town would have a surplus in its operating surplus in its general fund of just over $1 million.
Okay. All right. So if you were on for the call earlier, you know, the hope is that 2024 can be completed, you know, as soon as possible, and then with a focused effort on 2025, so that you know, I know you're definitely going to be well into next year, but you know, it's setting expectations. The goal would be, you know, certainly before June of next year for the completion and filing of the 2025 audit, if not sooner. But all of this really is contingent upon finishing up 2024. I'll open it up to the commissioners. Are there any questions? Understanding Becky has a conflict on this one.
No questions.
No questions.
Okay. And just to highlight, for 24-25, it was indicated that the town is projecting a $1.7 million surplus. Vijay, is that still in line with your expectations?
Yes, and we still, you know, have to make sure that all the open items we encountered in 24, that we make sure that it is completed. So even if we do all that, receivable balances and so forth, I think my expectation is that it's definitely going to be over 1 million surplus.
Okay. All right. Well, thank you both. And Mayor, we'll look to catch you on our next meeting, which tentatively is scheduled for February 18th. And it would be beneficial to the commission if, you know, at that point in time, you know, certainly we'll be looking for the updates on the 24 and 25 audits, but it would also be beneficial to receive an update on the process for development of the 26-27 budget.
Will do. Thank you very much.
Thank you.
All right. Thank you. Well, Kim, we just might make it.
You're on schedule.
It's a good omen for me.
Moving on to other business. in regards to the draft of the MFAC guidelines, we're going to kick that one out into the new year. So between now and then, I'll further some conversations with Kim in regards to seeing if there's some options to maybe putting a working group together to finalize the draft guidelines and then look to bring them before the commission for adoption, be it at the February meeting or the May meeting next year. Next after that would be the proposed calendar for the 2026 meeting dates. For the commissioners, just to highlight the proposed meeting dates, it's February 18th, 2026, May 6th, September 9th, and November 18th. And in the proposed meeting schedule, presently it's proposed to have the February meeting be a remote meeting, the May meeting being in person in a location yet to be determined, and September and November both currently scheduled as remote meetings. But I did want to open it up to the commissioners to see if there was any interest in maybe going with a 2-and-2 setup, and potentially also having the September meeting be in person as well. So the before and after summer meetings in person with the other 2 meetings being remote.
Mike, I'd be interested in a 2-and-2 if other commissioners are also interested.
I am as well. I thought the last time we got together it was a good meeting to see everybody in person.
Agreed.
Yeah, I agree with that as well.
I agree as well. I think 2-and-2 would be perfect.
Okay. All right, that would be great. So Kim and Bill, if you could note that for that September meeting. Do we need to adopt the calendar?
Yes, we do. And just we'll note with the change that was just mentioned. I have one question for Becky is, will we see you next year in February?
I'm not officially retiring until March 17th.
Thank you. That's good.
So if you want to replace me before then?
No, absolutely not. I'd like to stretch you to May so we can see you in person, but I'll talk to you.
If you want a retired former actuary to bridge you over, that's fine. I am giving up my actuarial credentials. I have not done any continuing education this year, and it's kind of nice.
That's okay.
So I won't be an actuary, but I will be an experienced former actuary.
Very good.
Okay. Yeah, Becky, it'd be great if there's a way that we can extend you out and get to see you in person at the May meeting.
In May.
Sure. In May. Okay.
Yes.
Well, I'll Steelman@gmail.com will find me in May. So I will put that on my calendar.
All right. So I would entertain a motion to adopt the proposed MFAC meeting dates for calendar year 2026.
So moved.
Second.
Okay. All those in favor?
Aye.
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 Okay, thank you. Okay, with that, just final comments. I want to wish everyone a very happy Thanksgiving, holiday season, and celebration for the new year. And we'll look to be together again on February 18th. Again, just I guess a final thought, it's appreciated the depth that all of you go into with the review of the documents that are submitted, the questions, and certainly the being an available resource to the towns, the cities and towns that are before us. So with that, right exactly at noontime, I would entertain a motion to adjourn.
So moved.
Second.
Okay, all those in favor?
Aye.
Aye.
All right. All right. Take care, everyone.
Thank you, bye.
Thank you.
Bye.
Yeah, thank you.
Thank you, Mike. Bye-bye.
Bye-bye.